I just got my bonus and my company gave me ISOs. ISOs are a type of stock option your company gives you instead of cash. They give you the right to buy company stock at a predetermined price, which is called the strike or the grant price, and it's usually lower than the current price of the stock. The idea is that you profit when the stock goes up and you want to work harder to make the stock perform. That sounds promising, but what about taxes? The tax treatment of ISOs can be way better than cash, but only if you follow the rules. You don't get taxed when you are granted, meaning when you're given the stock, and you also don't get taxed when you buy the stock or exercise your ISOs. Well, then when do taxes come into play? You get taxed when you sell the stock. And that transaction might get taxed as capital gains instead of ordinary income, but only if you hold the stock for 2 years after you are given the stock and for 1 year after you exercise the ISOs. What do you mean might? If you sell the ISO shares early, you can have what's called a disqualifying disposition. In this case, the difference between the grant price and the sale price is taxed as ordinary income instead of the lower capital gains rates. Got it. So it's important to plan for when I sell my ISOs to minimize taxes. Yes, and planning when to exercise your ISOs will help you avoid AMT, the alternative minimum tax. Is this why my ISOs might get taxed as capital gains? Yes, that income might get taxed as ordinary income if you have a disqualifying disposition or if you're subject to AMT. AMT is a separate tax structure that works alongside the normal tax structure, and it treats ISOs differently. How does AMT treat ISOs? When you exercise your ISOs, meaning you buy them, not when you sell them, there's going to be a difference between the amount that you bought it for and the fair market value of the stock at that moment. That difference is called the bargain element. Normally, you don't get taxed on the bargain element, but with AMT, you do. Essentially, you and your accountant will calculate your taxes twice, one under the normal structure and one under the AMT structure. If the AMT says that you have to pay more taxes, you pay that tax instead of the normal taxes. I want to learn more about ISOs, so I am definitely hitting follow.